Welcome to Accounting in Focus. In this video, we are going to record the journal entry necessary after a bank reconciliation has been completed. So in the previous video, we did the bank reconciliation, and this is what we came up with for the bank reconciliation. So I wanted to paste that on top so we had the numbers to work with in the journal entry. So what we need to do is we need to go back and we need to record all the things that were not recorded. So I'm actually going to put some dates next to my book reconciliation here. So this return check for $1,200, this was on 3/6. The charge from GasMart was also on 3/6. So I'll put that in. The error for check number 1256, the check was actually written on 3/22. The bank service charge was 3/31 and the interest was 3/31. Now if you wanted to, you can record this as one big journal entry on the last day of the month. The only thing we need to record is we need to record the items from book. Because if you remember, I'll put a big circle around that. If you remember, all the items from the bank, this is an outstanding check that is recorded in our books already. So this hopefully will clear in April. The deposit in transit will clear in April, and the other outstanding check will clear in April. So we don't need to record these items because they're already recorded in our books. Okay, so these do not record. Do not record. Underline, 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 exclamation point, exclamation point. Do not record the stuff on the bank side. The only thing we need to record is the stuff on the book side. So you can either do one journal entry, or for some of these things you may want to put them in individually. For example, the return check. So let's think about what happened with this return check. A customer wrote us a check for $1,200 and they did not have the money in their account to clear the check. So the check was returned to us from the bank. So this return check is actually from an accounts receivable. When you're recording this journal entry, you have to think about what expense accounts or what asset accounts might be involved in these transactions. So on 3/6, I am going to record this return check. So what we'd want to do is we'd want to find out who paid us and actually put it back in their accounts receivable. But so what I'm going to do is I'm going to debit accounts receivable for the $1,200 to put the person's balance back in their account. Okay, so now we're showing that this person owes us $1,200 again. And then I'm going to take the cash out. I'm going to reduce my cash balance by $1,200 to show that that money is not there. Okay, on 3/6, what do we purchase at GasMart? We purchase gas at GasMart. So we've got a fuel expense. Fuel expense, $140 debit, and we spent cash to buy that fuel, so that is $140. Okay, so we've now recorded the return check and the debit card transaction. Okay, so on 3/22 there was an error in check 1256, and check 1256 was written to Joe's Equipment Repair. So I would imagine that if we're writing a check to Joe's Equipment Repair, it's because we had equipment repaired. So what you'd want to do is you want to look back to see what expense account we used when we wrote that check. Because essentially, we said that the expense was $675, but it actually turns out that the expense was $672. So we need to reduce the expense by $3 and we need to put the cash back in our account. So on 3/22, I've got cash of $3 and I've got, we'll say, repairs expense. Again, you'd want to look to see what the company, what expense account they used when they wrote the check, and you're going to use the same expense account. And you might say, well, we're crediting an expense account. This is one of the very rare exceptions where you will credit an expense account, is when you're trying to reduce the amount of the expense. Okay, let's see. So that one's all done. And on 3/31, I'll write it one journal entry for both of these. I've got a bank service charge. Okay, bank service charge is an expense for $26. And then I've got interest income of $2. So on 3/31, okay, so I've got bank service, call this bank service expense, and that is for $26. So I'm going to debit this $26. Then I've got a credit to interest income, and that is going to be $2. Okay, so I've got 26 debit, I've got $2 credit, so I need a $24 credit, and that will be cash. And now we've recorded this and this. If you want to do those in two separate journal entries, you could, but I figure since they're both on 3/31, they're both, you know, I've got a bank service charge from the bank and I've got interest from the bank, which seems kind of silly to me, but banks do this all the time. So the net cash amount is $24. Okay, so that's it. So once you do your bank reconciliation, you want to make sure that you go back and you record all of your journal entries related to the book side. Do not record the bank side, just the book side. Okay, so if you need more help with your accounting class, I would ask that you check out accountinginfocus.com, which is my website with lots of information to help you with your accounting classes. Thanks. See you soon.